Victoria Scholar in London. She's a market analyst at IG Group. Great to have you back with us, Victoria. We've got another blow dealt from the US to Huawei. Can you tell us more about how markets are reacting to these new sanctions?
Yeah, well, it's the chip makers in Asia that have really taken the largest hit from the news that the US administration has decided to impose fresh sanctions on Huawei, like you were saying in your report there. Some stocks in the sector in Hong Kong and Taiwan down as much as 10 or even 11% in today's trade. One of the interesting things to note, though, has been that some of Huawei's biggest rivals, the likes of Samsung, have actually been catching a bid on the back of the news overnight in South Korea. But more broadly, I guess, in terms of markets, the fact is that it's reignited that risk-off sentiment across global indices amid concerns about ongoing trade tensions that we've talked about many times in the past between the world's biggest two superpowers, the US and China, of course. And that's why we initially saw European stocks a bit lower this morning, although they have managed to pare some of those losses to now trade into the green.
Let's look at gold prices now because they're back above $2,000 an ounce after spending, I guess, about a week or so below that key marker. What's driving this latest gold rush?
Yeah, I mean, it's been interesting to see this key psychological $2,000 an ounce mark come back into play today for gold, managing to surpass that level after last week, which was a pretty weak performance for the precious metal. I guess there are two factors at play here. Firstly, there's the decline in US bond yields and the US dollar as well after essentially a 2-year bull run for the greenback. But on top of that, we learned that billionaire investor Warren Buffett actually disclosed a stake in the gold miner Barrick Gold, and that really demonstrates his leaning towards the precious metals complex. I think one of the more interesting stories as well is actually when you look at silver, because it doesn't only have the safe haven appeal that gold has, but it's also an industrial metal and it tends to have outsized moves to gold. So that's been a very strong performer this week as well.
Meanwhile, on Wall Street, the S&P 500 almost approached a record high, while the Nasdaq actually hit a fresh all-time high. Can you tell us what's driving US investor sentiment right now?
Yeah, I mean, it's been interesting to see US equities, a major risk-on asset when people have strong appetite towards risk, reaching all-time highs when simultaneously your previous question, talking about gold, seeing that surpass $2,000, also tending to benefit from risk-off sentiment rising at the same time. And, you know, in the theory, in the textbooks, they should be moving in opposite directions. Also, when we've been told that the market is meant to be a good proxy for the economy, it sometimes feels like something's not adding up when we see these fresh all-time highs for the Nasdaq and a near all-time high for the S&P. And I guess the answer to the inflating stock market is not because underlying GDP figures are strong at all, but it's because alternatives like bonds are paying less. We know there's been major monetary expansion from the central banks like the Fed to prop up the US economy by lowering interest rates. And on top of that, the gains for the US stock market are being driven by a handful of stocks. It's not a broad-based recovery. It's the likes of Apple, which has still been doing extremely well despite the global pandemic. In fact, that's getting closer to that $2 trillion valuation mark. Would you believe it? Feels like just a moment ago that we were talking about the $1 trillion valuation mark, and now it's setting its sights on double that.
It's incredible, isn't it? Victoria Scholar from IG Group, thank you, as always, for your analysis.